Hey traders, Raghi here, and in this discussion we're going to dive into the NASDAQ. Now, as I'm talking about the NASDAQ, remember, this can apply to other indices, but when we have a sell-off, the first thing that a lot of us do is panic, and what we want to do is not panic, but rather look to related sectors, because the sectors are going to be where the opportunity is. So when we get a sell-off like this large red grab candle that we're seeing on the daily time frame of the NASDAQ futures, and you think to yourself, well, I've studied a lot of the things that I've learned here at the Countdown Trader, and I know that the JT Multi is telling me we're in a little bit of a sideways market. The red grab candle can break the trend. What do I do now? Here's the process. Think about what markets are related to the NASDAQ. Well, if you've been following us here for any length of time, you know that there are markets like XLK, XLC, XLY, but frankly, all of them dropped like the NASDAQ did. So we'll take another step deeper into the sectors. How about the semiconductors? They also dropped through the wave. Well, what about cloud computing? Look at the support here. This is relative outperformance. This is the kind of opportunity where we say this looks better than the NASDAQ. Let's keep going. What about cybersecurity? Once again, dropped, but it's a whole lot more supported than the previous sector. So what we want to do is think about index sector stock when the index is giving you heart palpitations, when you don't know what to do. Remember, you don't have to force a trade on the NASDAQ, but use the NASDAQ to dig deeper. It's that iceberg analogy, that glacier analogy that we talk about from time to time. The NASDAQ could just be the exposed tip of the iceberg that you see above the surface of the water. Dive below the water, see the rest of the iceberg, and that's where you're going to find a lot of times more resilient sectors, and then you can take the next step. What about more resilient stocks? But remember, don't panic, look below, see the rest of the iceberg for what it is, and find the related sectors. In this case, we're taking a look at cloud computing and cybersecurity, where there's a lot more resiliency despite QQQ or NASDAQ futures weakness. So then the next step is, well, how do we discover those sectors that can be those alternatives for us? So I'm on ETFDB right now, and many of you are probably very familiar with this site. We've talked about it a lot. And what we're trying to do is find different setups within liquid ETFs. So let me give you a really important tidbit here. First of all, you want to find volume that's at least over 500,000 average 1 month or 3 months. So here you can see that that meets that criteria. This is the Global Cloud Computing, CIBR. All right, what about or CLOU? So here's CIBR. We're going to do the same thing, right? Make sure there's sufficient volume. If there's not sufficient volume, you're not going to have a lot of liquidity at the option chain level, and you're not going to see the influence that this ETF has over the stock. So again, does this meet the 500,000 level? Really important when we have a sea of ETFs, most of which have very anemic daily volume. The next thing you can do, and I love this service, this is called Koifin. I'm taking a look at all the different sectors. So take a look. You can dive into the IGV software. This is a place to start if you don't know where else to look. IGV, FDN, SMH, these would all be related to what? Tech, right? So this is a great way to expose your trading to more sectors that are related to a broader theme. In other words, the NASDAQ sits on top, and then what do you have that will trade similarly to the NASDAQ, but not necessarily with the same relative performance? And that's the kind of comparison we do. Think about volume, think about sectors that would basically sit below tech.